Thank you, sir, for that comprehensive overview of all the initiatives in the digital education space. And one has to wonder what the impact of this pandemic would have been if some of these initiatives were not already in place. So a lot of this infrastructure had already come up before the pandemic hit, and to that extent, at least the impact was mitigated. We now pivot to the world of financial technologies. Over the next 3 hours, we have planned a series of sessions on issues related to fintech in India. And I can't think of a better way to start this with than with the unified payment interface, UPI. A remarkable homegrown success story in fintech in India. And we have with us, joining virtually, Ritesh Shukla, Chief Executive Officer of NPCI International Payments Limited, to deliver a keynote address on the strategic value of UPI. And this will be followed by a panel later. Ritesh.
Thank you. Thank you so much. Good evening to everyone. I hope you and your family members are in good health, keeping safe. Let me start by thanking the organizers, Carnegie India, for giving me an opportunity to engage with all of you representing NPCI International. Today, I'm going to spend a few minutes talking about UPI and its strategic value. If you look at UPI, it's today world's best performing fast payment platform. It runs on best-in-class technology with very robust governance model, simplistic user interface, having multilingual capabilities. The platform is run in a very collaborative manner with different players in the ecosystem and is catering to a wide variety of use cases in person to person as well as person to merchant domain across the length and breadth of the country. In terms of its importance or the role that UPI has played in India, I think we feel that UPI has played a very, very important role in enabling digital payments in India. The ecosystem has been built on the platform that covers the entire country, I mean, be it rural landscape, even the locations where there is no data connectivity. So we have a USSD module, and the objective that we are pursuing is of providing citizens an affordable payment option. A UPI platform today is enabling delivery of government and regulators' agenda in various areas, including financial inclusion, cash displacement, delivery of citizen welfare, and democratizing payments for businesses as well as consumers, promoting innovations by enabling fintechs come on the platform and create new use cases to kind of cater to a very different or uh, diverse audience, and bringing in transparency in the way we transact amongst other benefits. So we at NPCI International feel that UPI has played a very important role in enabling governments and regulators agenda to kind of take our nation towards a very, very robust digital payments oriented kind of society. In terms of performance, if we look at UPI has actually put India at the top of the world in terms of digital payment transactions. And let me share with some statistics here. In 2020, India witnessed over 25 billion digital payments financial transactions, which is 10 billion higher than the second best country. And this is an amazing achievement for us as a country, because even in the times of pandemic and before that, we have seen a very, very strong traction across the segments, and people are now, imbibing digital payments across all walks of life. From now talking about the UPI's performance from its beginning in December 2016, UPI has seen phenomenal growth in adoption and scale. In the year 2020, UPI as a platform achieved around $457 billion worth of commerce on the platform, which if you look at or compare it with our country's GDP is around 15% of India's GDP. Now this is amazing achievement, and this is unprecedented ever in the world. Now, since the first year of our operation, that is in 2017, wherein we had about $8 billion US dollars worth of commerce on the platform, and compare it with the performance in 2020, we have grown at a CAGR of 285%. And we continue to witness a very, very strong performance. And the same is reflecting in the volumes that we achieved in the month of November 2021. In the month of November 2021, we achieved commerce worth $102 billion. And this is powered by about 4.18 billion transactions. And the most beautiful thing in this is that 48% of these transactions were merchant payments. So this actually means that we as platform owners of UPI are enabling commerce and giving merchants, small businesses, a very affordable payments of digital payments option, enabling them accept payments services, and which is very, very important for enabling money move fast in the economy, even the rural economies. UPI today has given consumers and businesses an affordable and simplistic digital payments option. It is being used by about 120 million merchants across the country. So that's the power, that's the inclusion that UPI as a platform has driven. Success. Now, if you look at the success factors for I think it's been a very, very collaborative effort at an industry level, and of course supported by very progressive regulator in form of Reserve Bank of India. And it's a blend of internal as well as external factors that make it unique and the best performing platform in the world. Now, if we talk about some of the factors that are making UPI unique today, in terms of the internal factors, which would mean how the platform has been designed or how the platform has been wired. Some of the things that are noteworthy are that one is it is an API driven platform, so it is easy for the downstream players to integrate. It is interoperable, so it is actually connecting every merchant in the ecosystem, even if it is acquired by different players. So, for example, a merchant acquired by one of the players such as PhonePe or Google is able to accept payment from any other app, could be our NPCI's own app, Beam, or Paytm, or any other app. So it's complete interoperability in the ecosystem. It is real time, so it ensures faster movement of funds, enabling money move faster, enabling money receipt at the merchant side in a very, very fast manner. It runs in a very simplistic way. So it runs on aliases for person-to-person payment, and it runs on QR codes for merchant payments, thereby providing simplicity, safety, and security. The platform actually operates on open banking ethos. So what it means is that as a consumer, any resident in India can go to Google App Store or Apple Store and download any of the apps, could be Google Pay, PhonePe, Paytm, Beam, and after the laid down authentication process, they can connect that app to any bank account in the country and start using it. So there is no need to load funds. There is no need to kind of reload funds when the funds are exhausted. The apps are connected to the bank account, and it's actually enabling open banking in the real sense. It can be integrated with multiple channels, including the USSD channel, which is very relevant for people who are living in remote areas, rural areas, where the data connectivity is not as good as in the urban areas. So that's very important. Then we have a very, very collaborative engagement model, as I talked about earlier, that actually allows participants in the ecosystem drive innovation in the user interface and the user experience space, so that there is greater adoption, there is greater traction with the end consumers. And it's a very, very simplistic interface, as I talked about earlier, with multilingual capabilities. So people living in different parts of the country can actually access the app, the platform in their language of preferences. So that's again a very, very confidence building or trust building kind of effort. So these are some of the internal factors that have made UPI unique and have actually helped UPI grow to the scale where it is. In terms of external factors, I think that's again a very, very important aspect of it. So we've had a very, very industry-led approach, and the ownership and governance while lies with NPCI, but we've always got a very, very progressive guidance from the regulator, who have actually encouraged us to do more, have encouraged us to, achieve newer heights. There is a very, very strong fintech-like engagement model that we have developed, and it's actually driving innovation through a platform approach. So today, fintechs are using UPI as a platform to create newer use cases, to extend credit to small businesses, to merchants, to help consumers move out of their houses with confidence without carrying cash. So there's a lot of stuff that is happening on the fintech side, and we are continuously listening to the market. That's again a very, very important area to refine the experience that our users get from the platform, and also to add newer use cases which are relevant today and which are going to be relevant tomorrow. So that's again a very, very important aspect. And overall, I think it's a very, very convenient and cost-effective model for merchants to take on digital payments, and to kind of use this for their expansion in future. So these were some of the factors that actually make UPI what it is today, and make UPI one of the best performing platforms globally. Finally, to summarize, we have attained amazing depth in the area of technology that actually powers the platform, in the area of operations and governance that we have built around as guardrails and as servicing models around the technology that has been used to build UPI. And we have demonstrated unprecedented scale in the market. I don't think there are many platforms in the world who can claim to have a 285% of CAGR in a short span of time like what we have done. And this proves that UPI strategic value to landscape in India. Now, armed with what we have achieved here in India in terms of the technology that we have created, which is built on open source platforms, and coupled with the knowledge that we have gained in running the platform, in driving the collaboration, in getting engagement across the industry, in achieving the scale that we have achieved, we are ready to collaborate with other countries globally. We are ready to share the technology that we have here. We are ready to share the business know-how that we have gained by way of running these platforms. And we are also ready to engage with countries outside. Our intent is to embark on similar journey globally to drive digital public good and make a difference in the areas of financial inclusion, cash displacement, citizen welfare, and fintech incubation, because that actually generates employment and that actually creates more economic opportunities. So we are ready to collaborate with countries who are interested in imbibing UPI to drive digital public good in their own countries. And with that, I would like to conclude my session. I thank you for your audience, and it was wonderful connecting with you. I thanks Carnegie India again for giving me an opportunity to share the strategic value and the beautiful journey that UPI has had in India. Thank you very much.
So thank you, Ritesh. And Ritesh has made a very strong pitch for adoption of UPI. If he has his way, UPI would be adopted in all the countries in the world tomorrow. But whether that makes sense and what are the challenges that could come up in adoption of UPI in other countries, we have a panel to discuss this. And it's a truly illustrious panel comprised of policymakers, thinkers from all over across the globe. Umang Mundra is the Secretary of Singapore FinTech Association. Roberto Campos Neto is Governor of Central Bank of Brazil. Ritesh will also be joining the panel. Abhijit Bose is Head of India for WhatsApp. Aparajita Srivastava is Partner at Ikigai Law. And the moderator is Sahil Kini, Co-founder and Chief Executive Officer of Setu. I know, Sahil, you have a strong opinion on this matter, but I request you to be as neutral as you can be. Sahil, please.
Recording in progress.
Hello, everybody, and welcome to this very exciting panel where I'm joined by, as Suyash pointed out, extremely illustrious people from the payments industry across the world. It's indeed an honor, and I want to welcome everybody to this panel. Thank you so much for making the time. I first want to thank Ritesh for basically doing the introduction to UPI, so I don't have to do any context setting. This just happened. So what the progress that UPI has made, the amazing progress UPI has made over the last 4 years or 5 years is remarkable. And so I won't dwell on that too much. I think we're having a little bit of echo. Um, can I keep going? Okay. This discussion I want to kind of divide into two parts. One, to talk about how UPI can be a force globally. And this is something that I'm sure is a topic that is close to Ritesh's heart. And one of the things that I've gone on saying from the very beginning is China's been very good at exporting physical infrastructure, roads, bridges, ports, etc. I've always believed that India could play a massive strategic role in the global economy by exporting digital infrastructure. We've really pioneered digital infrastructure in the last 10 years, starting with Aadhaar and then moving on, of course, with UPI. And there are a bunch of other things that don't get as much airtime, but are probably just as critical, including electronic signatures, DigiLocker, account aggregator, which will do for data what UPI did for payments. But UPI is the one that is the flagship. And so would love to talk about how India can lead the way and basically share our wealth, our learnings, our knowledge in the true Indian spirit of working with other nations to drive progress. And so I want to get right into it with Ritesh. Ritesh, NPCI set up NPCI International Payments Limited with that express goal of taking, the UPI stack and the learnings across the world. And I know that you've reached out to 50, 60 countries at least to figure out how it can be used for public good in those countries. So give us an overview of the ambition of NIPL and what you're trying to achieve and what the progress has been so far.
Thank you for the question. Can you hear me? Can you hear me?
Yes.
Okay. So thank you for the question. What we are looking at essentially is something that you already talked about, but we have within the four walls of NPCI, we have created some best-in-class technology. And this is not only UPI, because UPI certainly is the best performing fast payments platform in the world today, and numbers truly speak for themselves. But we have other things also that we are doing. We have a domestic card scheme, which is the fourth largest card scheme by number of cards. We have highway automating solution. We have smart city solutioning. So we have a lot of things that we believe are best in class today. They run on top class technology. And we have very good experience in running those platforms in kind of driving customer adoption, in terms of expanding the network. So what at NPCI International, what we're looking at is taking some of these homegrown technologies to international markets, curated for that particular market, because every country is pursuing their own agenda, and it may have different elements of financial inclusion, cash displacement, create interoperability, because mind you, Africa has a lot of standalone payment solutions, but there is no interoperability. So, and then, fintech ecosystem, there is supporting rural economies. So what we are looking at is we are looking at taking the solutions that we have developed in-house to different countries in terms of curated to their specific needs, curated to their specific requirements. That's what we are looking at achieving. And we early days for us, it's been about a year for the organization that NPCI International came into existence, but we have kind of created a very good bucket of discussions that we have, and we are gaining a lot of attention. We have a lot of strong traction on various opportunities in these markets. So that's
Thanks,
what we're doing.
I want to dig a little deeper there and kind of go okay, we know, I mean, this is optimistic. We would drive into it with optimism, but then when we go into those conversations, there are always challenges. There are always little kinks that crop up. And so I want to understand what's the hardest part about convincing a country to adopt this. I mean, is it convincing the central bank? Is it convincing the banks who look at UPI's zero MDR model and go, oh no, I'm not giving up my transaction fees? Or is it convincing the merchants? What is it? What makes it hard about implementing it in another country?
So let me, answer to the MDR question first. So that's a very India-specific scenario situation. When we go outside India and talk about UPI as a platform, we clearly have maintained that it's a rule-based platform. You can define the way you want to run it, and you can include various credit sources. Like credit card is not included in India, but you can have that in your market. You can also have digital currencies. So we are, going with a very flexible, open kind of approach internationally. Now, you talked about challenges. I would say I wouldn't use the word challenge, but yeah, I think we have to be very watchful and have a very approach for each market, because every market is different and people want to have sovereignty in terms of the technology that they deploy. So we have to be mindful of the market needs. We have to be mindful of the business environment. We have to be also considerate of the geopolitical landscape, because there are geopolitical angles to it. Additionally, we are also working on expanding the scope of UPI ecosystem in India. So we are not only trying to create UPI in other markets, we also want to expand the UPI ecosystem that is operating in India to include cross-border use cases, and these are in area of acceptance and remittance. Now, for us to do this requires a deep study of the partnering ecosystem, because mind you, every infrastructure is built differently. The technologies that run it are different. The messaging formats that are used there are different. So we have to develop a deep understanding of this, and then we have to somewhere achieve common ground with persistence and patience. So these are some of the things that we are watchful of, and these are some of the things that govern the way we are engaging in internationally.
Absolutely. And speaking of, landing that and having some success, NPCI and Pay Now have announced a partnership to link the two systems, and I know that India and Singapore have been working very closely together. So I wanted to get a sense of, what does success for that partnership look like? I know that it's supposed to go live sometime in the middle of next year. June 2022 was the timeline that was kind of put down. What do you hope will happen with that partnership, and then how will you leverage that to kind of maybe showcase that as a kind of partnership for kind of model that other countries can use, and where would you go with that?
Absolutely. And for us, linking UPI and PayNow in Singapore is a major milestone. And it is actually, if you look at it in Indian landscape, what UPI has delivered is complete interoperability. We are taking it a notch above. We are just not trying to build global interoperability. And that is actually by marrying the two systems, and that is ensuring that two systems talk to each other on real-time basis. And what it would yield to the consumers on both sides is that non-resident Indians who have a very strong need of sending money back to their families in India, and the existing flows between India and Singapore, more from Singapore to India, are around $1 billion every year and growing. So these consumers who are living in Singapore but have a need to send money to India, they will be able to send it on a real-time basis using UPI ID, as against a complicated process today. Similarly, there are Indian students who are studying in Singapore. There are people who have businesses in Singapore from India. They will also be able to send money on a real-time basis sitting here in India to the concerned entities in Singapore. So that's the user experience we are looking at building. And this very closely ties with the agenda that G20 countries have, which is, to build a real-time cross-border interoperability between different countries. So we are actually working in that direction, and we hope to be ready by mid of 2022, and to serve delight to citizens on both sides of the border.
That's very exciting, Ritesh. I personally am very excited to see that happen. I think real-time payments between countries, by opening up your UPI app and sending money to Singapore would be very cool indeed. And so this is where I want to bring in Umang and hear about the Singapore side of the story. Umang, wanted to understand, what has the impact of, we all know what the impact of UPI in India has been, thanks to Ritesh's opening remarks. And of course, we live that reality every day here. How has PayNow changed the Singapore fintech ecosystem? What was the motivating factor behind it? What were the challenges, and what do you see the way as the way forward for PayNow? And then we'll come to the specific partnership and how Singapore would view the partnership with NPCI on this.
Sal, you spoke about motivation to begin with, and as in many such initiatives across the world, motivation wasn't too different. From a consumer perspective, it is about providing 24/7 real-time funds payments, real-time funds availability, real-time information, ease of execution, and very importantly, significantly lower costs. All of the same also apply to businesses, along with the added benefit of automated recon. And from a government or a regulator perspective, it leads to innovation, it leads to digital inclusion, significantly cheaper funds transfer mechanism that benefits the entire economy. Different countries have had different experiences. Singapore introduced fast payments in 2014. This is the first payment mechanism where individuals and businesses could transfer money from one bank in Singapore to another bank instantly. It worked well, was safe, secure, instant, and the volumes and values actually grew fairly rapidly. However, and I say this even though I was one of the people on the industry task force for implementing FAST, it frankly wasn't very convenient. And why do I say that? People still needed to have all the bank information for the person or entity that you wanted to pay to. You had to set this up through a secure registration process. Basically, there was friction, and this was a challenge.
Friction. Yeah.
Yeah, and PayNow while it was built on the fast rails, but in addition to the elements of safety, security, instant payments that we spoke about, there was massive focus on speed, simplicity, convenience, and very importantly, the user channels and distribution. So it began with making retail payments based on just mobile number or local ID number, which in India would be Aadhaar. Extending that to pay businesses, government agencies, associations, societies by using the entity's registration number. Extending that further to a unified payment QR code called SGQR, which does away with the need for multiple QR codes at merchants from different schemes. No need for POS machines, and start accepting e-payments instantly. Extending that to include virtual payment addresses for wallets.
Right.
And all of these things that we're focused on have led to exponential growth in PayNow. Our numbers obviously can never rival that of India. The fact is today, 4 out of 4 residents age above 20, and 80% of active businesses in Singapore actually use PayNow.
Wow.
In its first full year of operation, PayNow had 24 million transactions worth about 3 billion. It's been 4 years since then, and we expect to end 2021 with about 220 million transactions worth about 75 billion. Right, probably what UPI process in a month. But that's been the magnitude of increase. The count in 4 years is up 9 times, value is up 25 times. In 2017, for every 100 e-payments made, there were about 47 ATM cash withdrawals. Today, that number is down to 17. Again, tells you how that's working. Check volumes in the last 4 years are down by half, and Singapore expects to be completely check-free by 2025. So this very thought-through, calibrated approach where banks, the industry, fintech players, regulators work very closely together has actually paid us very handsome dividends. And there's a lot that we have learned from India Stack, and from all the other countries who've implemented similar systems.
Thank you, Umang. But it does sound like the evolution very similar to how IMPS then evolved into UPI, and then we learned a lot about QR codes and how to make that more interoperable, etc. So the journey sounds very familiar. Although a question that I might ask is, did you learn something more than what we've learned so far, because you implemented this maybe a little bit just after us in the evolution of PayNow. So is there something that we can learn now from PayNow's experience that maybe UPI can implement? Is there anything that comes to mind that maybe we could do better?
I don't know whether I should say, should I say whether you could do better, India could do better. I'm not too sure of that. But when you asked me the initial question, you also spoke about the impact of pay now in the fintech landscape and any learnings. And if I were to view these together, let me take a slightly different perspective or approach to this. Mr. Ravi Menon, who is the MD of the Monetary Authority of Singapore, in a speech at the Singapore FinTech Festival in 2020, he said fintech can be a force for good, can help create an inclusive society by ensuring that every citizen and every enterprise is digitally enabled and financially included. And he highlighted 4 key initiatives for consumers. 2 of them were pervasive electronic payments, and second was affordable cross-border remittances. Similarly, he highlighted 3 key initiatives for SMEs, one of which was seamless cross-border trade, and another was efficient multi-currency payments and settlements. We can see the focus on payments. What I'm trying to say here is the thing to learn, if there is one, not to say that India hasn't done it, is laying these out as key national priorities has really catalyzed and enabled the fintech industry and the financial service industry to actually create and provide solutions in the payment space, including PayNow. PayNow is one piece. There's a lot more that's happening because it's been laid out very clearly as a national priority. And today, therefore, as a result, there are about 175 licensed non-banking payment institutions in Singapore. It has spurred competition across the entire financial services space, leading to better offerings for consumers and businesses. And the fintech industry has also been at the forefront of all these initiatives in close partnership with industry and regulators. So Singapore has this model where the partnership between industry, players, banks, non-banks, regulators, extremely close. Everything is rolled out as a initiative between all these players. That is probably a slightly different model than many countries might have. And one of the things is there are very clear national priorities laid out from which flow through all these initiatives.
Thank you for that. That's very helpful. And I think, you're right. We are doing it in some way, shape or form. I think RBI's regulatory sandboxes, setting out agenda for new types of innovation is one way of doing it. And I think there are, roadmaps for similar kind of initiatives in India as well. So thank you for that. But before I let you go, one last question, which is the same question I asked Ritesh. What are you hoping for from the partnership with NPCI, from the PayNow NPCI linkage? What do you hope to see in Singapore? What are the possibilities you see?
Oh, as Ritesh said, it is a very significant milestone, one that is aligned with the G20 financial inclusion priorities. The most immediate impact for this will obviously be individual and business remittances. Payments will become faster, simpler, more convenient.
I'm more interested in the second order impact that you think might come out of this.
Yeah. So that's the immediate. But there are multiple use cases and also implications beyond just these remittances. While the overall design is still in the works, say, for example, if as part of this process, we are able to automate, say, execution and compliance of capital control rules. Okay, there are significant implications of this for many flows, like, say, crowdfunding.
Right.
If these capital control rules can be automated, just as I said, investment flows under the liberalized remittance scheme will benefit players on both sides. In Singapore, if we can link this to the national trade platform that Singapore is setting up, which digitally connects players across the value chain in Singapore and abroad, again, it will enhance seamless submission of documents, information exchange, and information along with payment. So there's the lot of things that could happen. The network effect of this is massive. And if I may sign a completely different thing, in the connectivity that PayNow has built with Thailand and is now building with Malaysia and India,
right,
there's a lot of thought that has gone into addressing the scheme design, AML measures, interoperability into the customer experience, the risk and controls for the entire scheme. And going forward, what could possibly happen, and this is just my personal view, is that as Singapore builds these bridges across ASEAN and other critical markets, it could serve as a hub just like Changi Airport does today. Other countries and networks could just connect to Singapore's PayNow and get access to the entire network that PayNow is building for instant, cheap cross-border funds transfers. They will not have to build their own bridges country by country, network by network, and nor will they have to repeat the entire effort that has gone into scheme design. So the ripple effects, the network effects of this could be really, really significant.
That's fascinating, and I think Ritesh's competitive juices would be flowing with that. He's building some bridges too, so it should be fun to see who builds more bridges, at least in the years to come. But it's nice to see
Collaboration,
that
not
we're not building
competition.
walls. Yes, 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 absolutely. And interoperability is great. The more links there are, the more the network can
In
connect quite
fact,
well.
just completely different topic, but Ritesh is part of NPCI. I'm an advisor to a company called Affin, or a platform called Apex, and we collaborate very closely together on the innovation that NPCI is driving. We just held a hackathon for NPCI with 1,000 participants from across 80 countries in the world that participated. So it's all about collaboration. It's all
Oh,
about
absolutely,
collaboration.
absolutely, absolutely. From Singapore, let's move to Brazil. Governor Campus Neto, it's such a pleasure to have you on the panel, and I want to congratulate you and the central bank and indeed the country of Brazil in launching PIX. Wanted to get your view on what PIX has done for the nation of Brazil so far. Was UPI an inspiration? I mean, that's a bit of a prompt there, but what has PIX done, and how has that experience been so far? It's been a couple of years now, right?
Well, thank you everyone. Thanks, Sahil, for the invitation. I hope we can build as many bridges as you have in Asia. So we're waiting for that. I think going into PIX, the first thing is what was the reasoning behind? We started to see that the market was in payments was converging very fast to something that we used to call here in Brazil the run for the gold, which was basically an attempt to merge content with texting with payment in one platform or in a collaboration scheme. And we were seeing that advancing very fast. On the top of that, we started to see that payments. When you look at the younger generation, how they were dealing with payments, we started to understand more and more what was really the driving force behind it. And it's basically people wanted something that was fast, secure, cheap, transparent, and open. So those were the 5 characteristics that people were looking for. So we thought, we need to advance with an instant payment system that will basically enable financial inclusion in a digital way. And also that will put a common bar or a common level so that new entrants in the fintech space can offer the same service in terms of payment so that we can level the competition a little bit more. So those are mainly the big forces behind it. We never expected to be that fast. So I remember when we launched PIX, it's 1 year now. It's the 1 year anniversary was just a couple of weeks ago. So when we launched it, I expected to have a couple of million keys in 3 or 4 months, and when we looked around, we had 20 million keys in a couple of days. So people were very fast to join it. It was free for every individual in Brazil. We are now, like I said, celebrating 1 year. More than 60% of the adult population already used it. More than 90% of all the bancarized people use PIX. We were able to retire from the economy in terms of cash circulating around 40 billion reais. So that's one thing that we are seeing also. And we started to see that PIX is enabling new business. When we started with PIX, the reaction from the financial system was, well, PIX is just going to substitute the traditional forms of electronic payments. Well, we have 2. One was called TED, the other one's called DOC. And my response to that was, no, I think PIX is going to be much more than that. And when we look at how exponential PIX has grown, it's much more than just substituting old ways of doing payments. Mm-hmm. I think it actually generated new business models. For people who produce things that are very cheap, items that are very cheap, you started to have an incentive for these people to start a new business, because now they can sell things that are very small ticket without having to pay for the transaction. So, I mean, it enabled a lot of new business model. A lot of people actually open banking accounts just to have Pix. So the initial reaction that this was actually going to take money away from the big banks, actually turning something different, which is we are generating bankarization, financial inclusion, and everybody's actually winning from that. So when I look at other systems, obviously we were looking at Aadhaar before, and we're looking at UPI, and we're looking at the way India was able to digitalize the system in such a wide way. For us was an incentive. We're looking at the features, and you know, as in every technology project, you know how it starts, but you never know how it ends. As we were building Pix, we started to understand that we could add a lot more than that. We could start having new features. For example, right now we have a feature that we call Pix Cashback, which is basically every store everywhere in the country now has become an ATM. Because you can go to any store, as long as it has a cash register, you can pay with Pix at a higher value and you can get cash in exchange. That's very useful for a country like Brazil, because we have many cities that don't have bank branches, don't have ATMs, and that's not very safe to carry a lot of cash around. So we started this last November. And again, when we started doing these new features, we started to realize that we can do much more. So I think it's a work in progress in a way, because we are doing more and more. I think we took from UPI and from the Indian system the way you actually monitor the keys and the way we actually do the keys. And actually, one thing that we're wondering right now is if the key used in Pix could be something like a digital identity, and if you can link other government services into that. And I think we're looking at, you know, how India is doing that. Thank you.
Thank you, Governor Neto. It's fascinating that you mentioned that Pix is free. I wanted to deep dive into that a little bit. When I visited Brazil, I learned that MDR rates in Brazil are quite high. I mean, for a poor fintech founder in India, where you're dealing with UPI is zero MDR, there's you've got to really squeeze hard to get even a few cents or a few paise out of a transaction. Whereas in Brazil, I was under the impression, I mean, at least I was told that the MDR rates are much higher, closer to 5%. And the concentration of the top 4 or 5 banks is they have like 90% market share. So MDR going down was always one of those things that was talked about in Brazil. And that's another extreme from where we are in India, where banks are complaining that since MDR is zero, it's hard to invest into UPI infrastructure. Both have their own sets of problems. How does Central Bank of Brazil look at merchant discount rates as a function of debit transactions? In credit transactions, it makes sense to have a slightly higher MDR because you want to cover the risk of a cashback. But in a debit transaction, there is no risk in the sense that it's an instant debit and credit. So you need to have some to keep the infrastructure up and incentivize the players. But with those nice juicy margins, what happens in a mobile payment system like Pix?
Okay, no, thank you. It's a very good question. Actually, it's important to separate, like as you said, cash, debit, and credit.
Yep.
And Pix is free from P2P, but the merchants pay to use Pix to the banks, and we thought this was a nice way to introduce competition. So, given that any fintech can offer Pix in the same level of service. So what we're seeing since Pix was introduced is the MDR for debit is going down. It's around 1% right now, slightly higher than 1%. So it's down 30% from what it was before. We think, rather than trying to impose something into the system, we prefer to impose competitive conditions so that the competition naturally will drive MDR down. So we think it's always competition is always a better force than just regulation. Obviously, sometimes you have to do more regulation, but in our case, we thought Pix is the instrument that will generate competition so that MDRs are going to go down. So for debit is around 1.12%, 1.1%. It's been going down, As we see new fintechs going into this space, I think it's going to come down further. Credit is a different story, and credit in Brazil has a very particular way of working, and there's a lot of costs that are embedded into a lot of things that disconnect from where the cost was originated. For example, in Brazil, when you buy with credit card, you can pay installments without interest rates. The person who decides the installment is the merchant, but the ones who take the risk is the banks. So we have, it's very different from the traditional systems. So we have a bit more cost there, and the cost is spread out into the chain. But when you look at debit, I think it's going to converge to something cheaper soon. But again, we think that the best way to do that is to offer instruments so that we have common level ground for everyone to compete, and the competition will be this driving force. Thank you.
Thank you. Thank you so much. As an industry participant in this ecosystem, I hope our regulators are listening to that one. Much like UPI in India, Pix has been integrating with WhatsApp and kind of driving payments through that, that most widely used of applications. How do you see a large player like that taking on, integrating into your system and driving adoption? What is the central bank's view on it?
No, our view has been that we want all the large players, not only WhatsApp. We want WhatsApp, Google, we want PayPal, we want everyone to be here playing and competing. The only thing that for us is something that you must have is when you started with a big platform, you must ensure to the central bank that you offer conditions so that everyone can compete in the same ground. So for us, it was important that the rail that was created within WhatsApp was such that if other acquirers wanted to jump in, they were free to do that. So we only authorized WhatsApp once we understood that that was actually the case, that it was open for competition. As the interaction of WhatsApp with Pix is going to happen with the payment initiator system that is now being built into our Open Finance platform, in our Open Finance project. It is actually taking place right now. They have not yet been operational on integrating Pix with WhatsApp. I hope that's going to happen. I hope also others will come and integrate. So again, for us, the only thing that matters is that we have a system that entails competition. We are not so much worried that you have a big player or a medium player or a small player, as long as you have a common ground in which everyone can compete.
Wonderful. Thank you. Thank you so much, Governor Campus Neto. I'll now come to Abhijit Bose. Abhijit, WhatsApp is really, I'm really bullish on the future of payments on WhatsApp. I think, we have 500 million people in this country that use that application. Distribution is everything in a sense. And you've had a long journey to scale up UPI payments in India, and that's putting it mildly, I think. But now you have clearance to go up to 40 million users, I think, and soon probably that will go up even further. How is WhatsApp looking at payments, maybe worldwide, but more specifically in India? How has that journey been? And now that the floodgates are beginning to open, what do you hope to achieve?
Yeah, thanks, Sile. So first of all, India has always been kind of the bellwether for WhatsApp. It's our largest market, and a lot of our requirements and a lot of what we kind of learn and kind of export to other markets comes from here, and we're very proud of that. When it comes to payments, most of the requirements and a lot of the features that we've actually built into WhatsApp are also kind of being driven here locally from India. So India is a great place to start in terms of our payments journey. The way I look at it is UPI has been one of the great success stories from India. It's, as we've talked about, and you've referenced. I still think there's a long way to go, and that's kind of the way we approach it. There's massive white space. So if we've got 100 million plus active users now, which by any measure has been an amazing ramp up, there's still 500 million plus to go. And I think we have a unique role in helping accelerate that adoption. And those are the cohorts which are probably less comfortable with digital. Those are the ones that are also probably comfortable with apps like WhatsApp. So I think if we focus on simplicity,
Yep.
We focus on making sure that our basic things that made WhatsApp adopted by a large group of people here in India, local language, working on feature phones, a complete focus on the customer interaction and just making sure it's a very simple, clean UX. Those things will help drive adoption, which is kind of everybody's goal. So that's kind of point number one. Point number two, we're going to invest significantly now that we've got the cap increased, and we, as you said, fully expect it to increase as we ramp up. We'll invest in awareness and adoption, and we'll do that through partnerships. As the governor rightly said, listen, WhatsApp here, I think our role is as probably a great enabler. And in partnership with the banks and partnerships with grassroots organizations, that's how you're going to get to the cohorts we're trying to get to, which are really financial inclusion, like we've talked about. So one is, how do we help leverage WhatsApp and all of the assets and kind of comfort that we bring to the next 500 million to drive adoption? The second point I'd make is, I think you touched on it earlier, we shouldn't undersell the India stack story.
Yep.
I know you kind of focused on UPI, but India is still way ahead of rest of world. And the real story is not about adopting payments.
Yep.
The real story is people get payments to do something. And it's the entire convergence of India stack in public and private partnership, where all of us can provide access. That's when financial inclusion at scale is going to happen. And that's really the power of UPI when it's amplified by India stack. And what I mean by that is we can do several things. We can, of course, get everybody onto digital payments. We can also integrate with banks and service providers to make sure that the best pension schemes or best microinsurance or best microfinance products are actually accessible over these platforms. And that's important. That's where payments becomes a force multiplier for financial inclusion. And I think that's the second white space for all of us here. And we have to think about the goal not being about payments adoptions, but basically financial inclusion adoption. And I think that's really where we can help in.
Amen.
And I think the important thing, I'll end on this, what makes me extremely bullish about the next 5 years is all of us, the entire market's massive. It will be many players. It will be probably the most democratic deployment of payments anywhere in the world. As the governor said, all of us are kind of on an open interoperable stack here. But India stack, when you take away the frictional cost of distribution and the frictional cost of payments and the frictional cost of identification and the frictional cost of data kind of passing back and forth, you change the cost structure that's actually been the ceiling
Absolutely.
of scaling financial inclusion to the bottom of the pyramid. And that's the great opportunity. And I think that's where we're most excited and where we're going to focus and where we can uniquely help.
Oh, thank you. That's that it paints a wonderful picture. I'm so glad that you took it beyond payments and into convergence of formal financial services and delivery of that by reducing cost. And so, one strange question, which is, does this have to be restricted? I mean, does WhatsApp view this as a conversational interface at all, or does WhatsApp change as an app in the future? I mean, maybe this is too far out, but you're selling insurance, or I mean, you're getting a pension and you're interacting with documents. Are you doing all of that on chat, or what does that look like?
It's a great question. And the first thing I should clarify is WhatsApp's not doing anything.
Right.
Again, our job is to connect users with the people and services that they want to interact with. That's all we do. And I think we took a very simple but consistent approach that I think the India Stack team did as well, which is do something really well, but don't try and kind of expand yourself beyond kind of what you do best. So we're not selling insurance or pensions. We're allowing banks, the national pension scheme, whoever it is, to have a presence on WhatsApp. We will always focus our UX and our experience to make sure it's customer centric. Every interaction will always be in the hands of the customer. So you're not going to see spam. We could have done 100 things and we never have. It's always the customer saying, I want to talk to this person, or I want to have access to this service. And WhatsApp will make that journey both easy and kind of easy to complete because they understand our user experience. So that's the way we think about it. And that's why we're creating a platform where even the smallest business has the same availability and presence and access for somebody as the largest MNC. So it's truly the most democratic in mind avatar of what digital and financial inclusion can look like coming from emerging markets. And I think it can be like UPI template potentially for the world.
Thanks, Abhijit. I like how you skirted my question on whether it'll be on chat or not, but let's move on from there. Let's come last but not least to the lady Aprajita. I want to talk to you about what's the way forward for UPI, and UPI, while it has scaled wonderfully and it is it's for me one of the ninth wonder of the world as far as it's going after compounding. I wanted to ask about what's the future for UPI here. And we've heard about some conversations, for example, on credit on UPI. We've had some starts, but we've gone some back and forth there on, part of the problem being MDR. You're doing a credit transaction and MDR schemes are not clearly defined necessarily. I'm sure they'll figure it out. How do you see that evolving? What are the things that UPI needs to do to not just grow scale, but like Abhijit was talking about, increase delivery, become a channel or a mode for delivering financial services and driving financial inclusion?
Yeah. So I think the current architecture of UPI is meant for account-to-account payment, right? Aprajita wants to transfer money to Sahil or to a merchant. The beautiful thing about UPI is that the architecture already knows who Aprajita is. The issuing bank has done KYC on Aprajita. They know, exactly what her identity is. So the payment through a UPI channel can be done through a current account, a saving account, or a PPI account. The only way to deliver credit through UPI is through an overdraft account, which is associated to the bank account in which I have my UPI handle.
Yes, or a lot of people have been using that PPI route where you
PPI
fund it
route,
with
yes,
a loan, and then you say, okay, this is no longer loan, it's a debit transaction because it's going through PPI.
Yeah. So you have an NBFC at the back end, which which is financing the loan.
Correct.
You have an interface in between which provides the PPI. Loan comes to PPI. Technically, it is a debit transaction.
For those who don't know, PPI is a prepaid instrument. That's sorry. Go ahead.
Through an e-wallet, like a prepaid instrument, like an e-wallet, money comes from the NBFC to the e-wallet, and technically it is a debit transaction. Now, for credit on UPI to run in its sort of true blue sense, the problem that occurs is that the KYC of the person paying or the KYC of the person availing the loan becomes a problem. A lot of fintech companies sort of came around with a hack, right? They said we'll create a pooling or a nodal account in between. That pooling or nodal account will become the payer, and that's how
it's a little dance, right?
Yeah.
The money moves from here to there. I mean, it's a loan that goes into a pool account. It's a hack.
It's a hack.
So how do we fix it? I mean, NPCI doesn't like this hack, understandably.
So all of those fintech companies which came up with that hack, with that sort of fungible sort of pooling account or that nodal account, they had to sort of roll it back, right? Because the architecture isn't designed for a pooling account in between, which then acts as a payer for every single transaction. The issuing bank hasn't done KYC on Aprajita, the payer. The NBFC or the lender may have done KYC on Aprajita, but in the UPI ecosystem, it will still be a pay transaction. It isn't a credit transaction. Now, having said that, I think UPI...
Why should it matter whether the user has been KYC'd on the payment network or not, if the KYC has already been done by a regulated entity? Why is this a problem?
Sure. So, you can do KYC within the UPI ecosystem, but for the NBFC or for the lender to have done KYC on Aprajita, to know who she is, the UPI network right now doesn't know that, right? It's not reading that Aprajita has done, KYC with X NBFC lender. Only the app or the platform which has the tie-up with the NBFC knows that, which is not communicating with NPCI, right? Which is why the hack, which is why the pooling account where money comes in and then money is getting debited from that account to the merchant account.
So how would we fix that?
So a couple of ways to, sort of fix that is to, when there is a payment transaction initiated by a user, you actually either load it into a PPI. NBFC credits loan amount into the PPI. The PPI has done the prepaid payment instrument, or the e-wallet issuer has done KYC on me. So you still have a pool account in the PPI which transfers money to the merchant. And so you have some sort of identity of the user who's paying, who's actually taking a bundled kind of loan product at one end and paying a sort of a debit product from at the other end from her PPI. That's one way of doing it. But
it doesn't solve the MDR problem, right?
Yeah.
I actually want to divert a quick question there to Governor's Campus NATO, where there are two different. I mean, the debit MDR is very different from the credit MDR on PIX.
Yeah.
How in India, we're saying that 48% of transactions are merchant transactions, but there are also very small merchants where they're almost like P2P in a sense. And there's even a term within NPCI for that. They call P2P2M, P2PM. And so it's a strange little term. But the thing is, one of the main challenges has been, since we've been running with one MDR scheme, splitting it into two, saying, okay, here's credit MDR, here's debit MDR, has been tricky. How did you tackle that challenge in Brazil, Governor Neto?
No, in Brazil, it's very different because when we look at the way people use the products, they use it in a different way. Like I said, the credit card in Brazil is a very different animal when you compare to some other places because you have the ability to actually finance a purchase in different installments without paying interest rates, and
Right.
it's like every month you have an installment. So the risk is completely different from a normal credit card in other country. So because of the different risk, you have a different scheme of payments. And actually, because the one taking the risk, which is the bank, that does not have the decision whether to do the installments or not, there's a shifting of the risk, and that actually is embedded in some of the payments. And I think one of those is the MDR. The other one is the interest rate charged on the revolving, because
Of course.
the interest rate is very high because it's paying for more than just financing. It's paying from other costs that are behind the structure. So when you look at the debt at the debt card, those I think it's converging very fast. It's converging very fast, and I think we'll keep converging very fast. But again, when we think about the way to approach this, and we have done interventions just regulating prices, those never work very well because at the end, when you intervene with a price, you need to understand why the price is there, and we need to understand the cost structure. And it's much easier to make sure that you have a competition, a system that you have open competition, and the competition will be driving prices down. And I'm sure when you look at MDR for credit in a couple of months or a couple of years, it's going to be very close to what it is in other countries because the risk profile will be similar. And the risk profile will be similar because we open a system in which everyone can compete with the same elements.
Right. Thank you so much, sir. Coming back to you, Aprajita, let's talk about another future problem for UPI, which is, it's also a past problem, it's a present problem, it's continuing, which is autopay. Speaking as somebody from the industry, recurring payments is one of the three grand problems in financial services. One is onboarding or KYC, the second is underwriting, and third is recurring payments. That's my view of the three grand problems. Recurring payment is something everyone's asking for. UPI autopay was launched like a year ago. It's had some tepid adoption. It's working in some places. It's not scaled and taken off the way UPI has. Why is that?
So I think some initial sort of lackluster performance of the product may have been because of the failure rates, but these are minor blips, right?
Yeah.
Because of mandate registration failure rates, customers do have very short attention spans in terms of setting a recurring transaction, and completely understand, Sahil, your point of view that a recurring payment is needed for any subscription.
The Holy Grail.
Right? It's the Holy Grail, yeah. That's fair. But I think one of the biggest spikes we saw in UPI auto pay registration was when RBI's card mandate, the sort of recurring payment card mandate rules kicked in, right? Then you saw the bigger merchants, the OTT merchants, Netflix, Hotstar, essentially, start introducing auto pay and users becoming more familiar with that kind of setting a mandate on UPI itself. But just to sort of zoom out from just autopay as a feature on UPI, I think UPI is a rail that goes to the most efficient financial product. So, for instance, it's a very common misnomer to say that UPI killed PPI, right? UPI just exposed the inefficiency
Yeah, it was
of
just better.
yeah,
That's what
of
it
a
was.
prepaid payment instrument.
Yeah.
UPI showcased that your bank account, your current account, saving account, is an interest-bearing account. It's easy to make payments from this account. So you had a move from PPI in favor of a bank account.
Yeah.
So because UPI sort of allows users to gravitate to the most efficient financial product or the most efficient financial feature, I think UPI autopay will also pick up, right? There may be temporary blips like, a failure rate in terms of mandate registration, etc. But whether it's autopay, whether it's credit on UPI, because they're both powerful use cases, UPI is the right way to deliver them to users because the difficult part is already done, right?
Yeah, the distribution is done.
Yeah, the distribution is done, the customer adoption is done, people are aware and comfortable of UPI. So it'll always gravitate, to my mind, to the most efficient financial product or feature.
Absolutely, absolutely. I actually, want to take a few questions that we've received from the audience, and I'll go in the order that we've kind of received them. For Ritesh, we have a question from the audience. It says, "What newer international markets is NIPL considering? Beyond, let's say, UAE and I mean the Middle East in general and Southeast Asia, will and this is of course the classic Indian. Can we teach the West something? Can we finally take it to Europe and the US? How is that looking?"
So there is a long answer and there is a short answer, but I'm going to stick to the long answer. So please bear with me.
Audio isn't great, right? Can Ritesh, can you just say something?
Can you hear me?
Yes, much better. Please go ahead.
Hello? Hello? Okay. So I'm saying there's a long answer and there's a short answer, but I'm going to stick with the long answer. So at NPCI International, what we are looking at doing is we're looking at primarily three broad, initiatives. One is, creating acceptance of our homegrown payment instruments, which is RuPay cards or UPI powered apps. The second is building cross-border remittances corridors. And the third is creating UPI-like ecosystem in other markets, the way we have done it here in India. And for each of these three initiatives, we have identified markets basis business potential and existing flows. So, for example, for acceptance, we are looking at countries where Indians like to travel, and these could be countries in GCC, countries in Europe, countries in North America. So we are working on these opportunities, and we've identified the different discussions going on with different players in these markets. Similarly, for remittance, we are looking at places where Indians live and they have a need to send money to India. And of course, GCC countries roughly, UAE, Saudi are the top two countries, and then you have US, followed by Qatar, Kuwait, Canada, UK. So we are looking at partnerships in these countries. Finally, the third is what is creating UPI ecosystem in other markets. So we're looking at developing countries, more like in a South-South cooperation model. So these are countries in America, South America, Africa, and Southeast Asia. So that's is where what we are targeting in terms of the partnerships on these three initiatives.
Understood. Thank you. Thank you so much, Ritesh. Bobby, there's a question for you. Sorry, Abhijit. Abhijit is an old friend, so I still call him Bobby sometimes. It comes out. Abhijit, the question that's come up is, what are the India-specific features you're rolling out in the payment system or within WhatsApp? And the other part is, what do you hope to do differently? Because there are already established players in the ecosystem. I mean, I can half answer the question saying nobody has your install base, but that's another matter. Let me not answer that question for you, please. Let me leave both questions to you. What will you do differently, and what are the India-specific features?
Sure. I'll start with the India-specific features. We've kind of announced a lot of these before. And as I said at the beginning when I first answered, almost every feature that's kind of being baked in to what we think is the WhatsApp experience is coming out of India. So a lot of the learnings, the initial launches, all of the pilots that we've done have come in. And some of the things that you've seen in the India app are India first features. First example is nowhere else in the world that composer, which is that bar at the bottom of your message screen that all of us are familiar with, now in India has a rupee symbol.
Right.
You won't see that anywhere else in the world. That was done for India. It is there to make it easier again. How can we reduce clicks and make it simple for people who are non-native or less comfortable with digital to really kind of adopt payments and kind of demystify it? We put the NPCI interoperative QR code, of course, was available in WhatsApp, but we put it on the home screen through the WhatsApp camera. Again, so we took significant steps to take kind of what would be major features in an app that's loved by so many people around the world and actually designed it and optimized it for accelerating and simplifying payments. So those are two examples. The other things that we're doing are not just at the feature level. It's, again, on the same theme. How do we rethink breaking the ceiling or breaking the floor, probably the better analogy, to get to the next cohort? I think those who are comfortable with digital will adopt quickly, and at India scale, of course, those turn into hundreds of millions of people. But to get to the next cohort, we really have to think about how do we partner and kind of fund digitization initiatives. We're adopting villages now, right now, which has been done in the past, but
Yeah.
really now that there's more scale, we can get more merchants, we can get more consumers onboarded and see if we can create a template that can then be, at this stage, replicated elsewhere. And sometimes, as you know, as an entrepreneur, it's not the idea, but timing that actually is the key to success. So same idea, but done at the right time often
Yeah.
yields different results. I think this is the right time. And again, I'll reiterate the ecosystem coming together so that there are services, and the word should be not digital payments, it should be digital access. So what I think we're doing differently, and what we're at least advocating differently and more vocally, is we have to get the microservices on there for the cohort. So buying a bunch of stuff that all of us do on digital payments daily is probably not the need of the hour, day, week for the people we're trying to reach and who need digital payments and financial inclusion the most. So access to medical, access to financial services, access to education. We have to graduate and matriculate as an ecosystem to that language. Otherwise, we're not impacting lives. We're just getting more people onto the payments set of rails, which is the first step, but not the end goal. So I think that's what we're doing differently. And I think as a platform and kind of with our open access, we might be able to do things differently than kind of other companies are able to do.
And staying with you, Abhijit, one of the questions that I'm seeing here is, then this is a source of consternation in domestic policy circles, saying we built UPI as a domestic public good, and here we are. The dominant players are PhonePe, which is owned by Walmart, Google Pay, which is, Google, and now WhatsApp, which is going to come and, scale massively. What's left for the domestic players? How do you view this? I mean, is this a topic of conversation at all? And what would you say to the domestic players, in a sense, when this consternation shows up?
Well, look, I live here. Everybody who kind of works on India payment style, as you know, and I've been here now 16 years in India, we don't view ourselves as not Indian or not domestic. The organizations that are coming here are, I think, very much domestic, have been rooted in payments and have been rooted in kind of the India story from ages. And as you referenced, I think we've all built and started companies here. So I think what you're getting here is what we want are people who are invested in India and companies that are invested in India and are investing in India and putting their money and effort and energy where their mouth is, which we are, and prioritizing this country to drive to raise the tide, to raise all the boats. So our common goal should be interoperable systems, should be making sure that we increase awareness and adoptions, and then NPCI has done a phenomenal job, as has kind of the government and regulatory bodies, of making sure we maintain guardrails and it's interoperable, and there's a fair playing field. So we don't think of it like that. We think of it as, how do we deepen our roots in the country? How do we make sure that we are representing India first, not some kind of thing sitting in other countries? And it's, by the way, only by thinking market first, you actually win. So companies that come in with a different mindset is, as I've said many times, and many people said, the worst way, or easiest way to fail in any emerging market is to come with a non-emerging market mindset and try and drop it here. It doesn't work.
It's true.
You start local market first, and hence I think any company that's succeeding here is doing so because they're local, they understand the market, and they're looking India first, and they're hiring and kind of growing those teams and those services.
Thanks. Thank you so much, Abhijit. And with that, I think we're out of time. Let me end by saying thank you to all our panelists. It was such a pleasure talking to all of you about the future of digital payments and UPI in particular, and how we can make it a force for good across the world and deepen the penetration and deliver financial inclusion to our own people. Thank you again, everybody, and I hope the audience enjoyed the panel as much as I did.
Thank you.